In this video, we are going to be analysing NGL Energy Partners because it was requested in the comments. Now, to get straight into it, first I want to cover a few of the catalyst and kind of fundamental announcements. So one thing I quite like the look of first is going over to their earnings. So you can see over here, yes, they did have a net loss of $33 million. But what I did quite like is that's on a revenue of $2 billion. So the difference, to kind of turn that to, a break even or a bit of a profit, I don't think will be too difficult from here on. So I do think we can start seeing some more profitable quarters. And again, we have had one. If you go back, you can see earnings per share was actually positive. That obviously most recent one was negative, and the other three were negative. So it may just show it's inconsistent, but it shows that there's definitely opportunity to get to profitability. One other thing as well is you have been seeing House representatives buy up this stock, and again, a lot of this was actually before the earnings release, and we did pop off that. But yeah, so we've had those kind of things to be paying attention to, but now we'll go over the key levels. What am I paying attention to? And one thing I do want to note first is I like the longer term view of this chart. Normally when people are recommending the stocks, they tend to be these small cap stocks, which I thought was going to be the case because it's a $3 or $4 stock. That they're like the Mullins and stocks like that, where they just continue in a strong downtrend. But in this case, you can see this is a 1 year chart. Yes, we did trade quite low around here, but again, obviously off that previous earnings, that first positive earnings, we did get a massive move up this, and we are sustaining. I mean, we've done that for a whole quarter now. So we can definitely see, probably not that likely that we come back down to fill that gap, at least in the near term. So again, we can be a bit more positive on this stock now on the longer term view. So I do like that, but now to cover the key levels, and for this I like to go on a short term chart. So what we can see is right now we are into a resistance. We can see obviously we hit it back here. We're retesting it now. Not only was it that previous high, but it is also our first deviation on the 1 year. You can see again we tested it there. We got that pullback, and now we're testing kind of for this third time right now. I think it's kind of just making up this decision. So I wouldn't trade where we are currently right now, and I would kind of wait for a bit more of a confirmational move, meaning either we break quite a bit below, come back to test it as a resistance. If it holds, and we could look for that downside move, or again for the same thing, if we can break above it, come back to test it as a support and hold, then again we can look for a move to our next resistance. Now what I also like with this stock is you can see it is being respected. We respected it there, we respected it there, and we got like these pullbacks. So what this really tells me is it doesn't really matter if you're a long bias or a short bias trader. These should be, at least from the previous few trades it would have provided, have been relatively easy and kind of simple trades which worked out relatively quickly. So this gives me more confidence if we can break up at 475 and 495. Again, we can use that as a range. As we come into this range, I'm looking at that short bias because again, that's me being a reversal trader. So I'm looking to short that range into that $4 mark. But again, if you're a trend trader, potentially looking to, if you're already long, potentially holding to that 475, or again, if we can try and get an entry around this level for the break and the hold, then again our targets are going to go to 475, 495. So again, these levels are going to be the same levels are going to be used whether you're a short or long bias trader, but you will probably just use them in a different way. So those would be our key targets. Again, I like that as a short bias zone because again, you have the two levels very close together as well. Just give me more confidence for that relatively quick pullback to $4. Now, if we break that range, we do have another resistance if we go higher at 570 to 580. Again, another range, which I like, only 10 cents. So that is going to really be a really nice level to trade. Now you can see it's got the green line. This means it's our third deviation. So if I'm a long bias trader, I'm not really tending to hold stocks past that level. And the reason for that is, firstly, if you know what the third deviation is, 99.7% of the data should trade below that. So if we know that if we start trading to this level and potentially even pop above it, it's most likely going to be short-lived. We're most likely going to start trading back below it. So if I'm a long bias trader locking in profits there, or me as a reversal trader really looking to get short bias in that range and trade that down to at least $5, if not, look to hold some down to that $4 target. We do have one final target to pay attention to the upside. Again, even if I was a long bias trader, I wouldn't trade to this 660. And the reason for that is, again, we're above this third deviation, so the likelihood of staying above there is a lot lower than just reversing from this level. So again, if I was holding position long, I wouldn't be looking to hold past 580. But if for any reason we did break through there, I'm definitely looking to get short at 660, looking to play the first targets to 580. If we break that for 90, and if we can break that $4 as a final target. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.